Sanjiv, hi, good morning. Picture perfect, I guess. The GIFT Nifty is indicating an 800-point gap up start.
Yes, good morning, Aisha. We live in strange times. Till Thursday, Friday, the pessimism was overdone. I had given a rough estimate. Okay, by 23,300 on 4th is coming. Now, God has been kind and it is it's exceeded that. So yes, the bears will be scampering, but the ones who have been watching the ET now will be laughing their way to the bank, and rightly so. Stay invested in India. It's in a bull market. This will only reinforce the left out feeling, which is humongous.
Yeah, absolutely. But Sanjeev, for those who didn't go fully invested into the event, I guess now is too late to get in, right? Or do you think now is as good a time as any?
I say it depends on your horizon. If you are a very, very short-term trader, then obviously there is no room for comfort. But if you are looking at the slightly longer term, you've got five things going. Rainfall is expected to be very, very robust. Your GDP numbers are good. Your macros are doing well. Oil is at a 3-month low. US bond yields have fallen. And fifthly, your demographic premium is just about starting up. So I think there is still a lot of room on sectors which have been ignored. And that is where you should be looking for real wealth creators, which may have languished because of the momentum trade. Maybe the momentum trade does not take off the way it is envisaged because already those values. So you have to choose and pick your stocks and be more confident. But at least the uncertainty is out. Now, whether you buy today at 23,800 and see a 700-800 point correction during the month, that is very much on. But at least start to increase your exposure to equity, because there may be no big opportunities until the budget.
Absolutely, and there's no way to participate in this mega bull run than being fully invested. So, Sanjeev, give us those 4-5 stock ideas that you just flagged off that viewers can look at from a medium to long term.
Yeah, so firstly, I fully agree with Kunal. I think Aircon and some of the, but I'm not as bullish on defense and this thing because the valuations are. I'm looking at infrastructure, a stock called HCC. I'm very bullish on that. My two favorites, India Bull Real Estate and Vodafone, will open gap up, and those are the stocks. But on value picks, I'm very bullish on Wipro, and I reiterate, this will be the star of 2024 as far as IT goes. Secondly, we are looking at hardly any optimism on the insurance players. As falling yields and gross net value additions come, I think HDFC Life, SBI Life, and New India Assurance. New India Assurance has been our third pick, which has been we think these stocks are extremely valuable at these prices. You can't but make money. And lastly, I would say small banks like RBL Bank, which I think is now going to be taking off from here on the back of credit expansion and their very good mix of credit liability ratios. These are few of the names. But like I said, the real momentum is in GMR, Vodafone, and India Bull Real Estate. Don't wait for too much long to get into these stocks and add these quality stocks which we told you. Wipro, the HDFC twins, that is HDFC Bank, HDFC Life, and New India Assurance. That can be a dark horse.
Great. Got a whole host of top recommendations that Sanjiv Bhasin is recommending. Those stocks that you can buy on a 5% fall, the likes of IBREL, all of them making the list. But, Sanjiv, I'm curious to get in your take on some of the most owned FII stocks, for instance, an Axis Bank, HDFC Bank, or ICICI Bank. Given the kind of exposure that we have, this is within the BSE 200. What would your outlook be on how some of these large cap private banks have performed and now what the road ahead looks like?
Yeah, good morning, Awan. I think they are rightly poised now to take off because they have languished despite coming out with stellar earnings. And you must remember, their cost of deposit is much lower than other, PSU banks. Plus, if there is any untowardness going forward, the NPAs will rise on those banks. So I am very bullish on HDFC, ICICI, and Axis, even Kotak. But I said the dark horse over there will be RBL. This is the time private large cap banks should outperform for the rest of the year. So we have an overweight on these private large cap banks.
While we stand right now is more important for a trader. There are three things now I should to look at. One, can we fall more? B, are we in for a V-shaped rally? Or we are likely to just bottom out let's say in a course of 1 or 2 days. These are 3 questions which I think the trader should now really focus on.
And the bigger question is, should you buy the fall already or not? I guess the sum and substance of all of it.
So let's look at this very interesting intraday, the 1 month chart. Any guess how much we've fallen in the last 1 month, including today's panic?
I think 4%.
3%? 3%? What's your guess?
Yeah,
Today's fall
roughly
included.
around that, 3%. Oh, today's fall included. I don't know, 4%?
Okay, we're actually down 2%. Oh. We are only down 2% in the last 1 month. So frankly, if you talk about in last 1 month, we saw a pre-election rally and then a election disappointment. What are markets reacting to today? Markets are reacting to an exit poll disappointment. If the current tally of 297, which is for NDA, and India, which is
227.
If it comes through, frankly, Prime Minister Modi comes back to power. It does not. Will a defense order get changed? No. Will a railway orders get changed? No. So if the current government comes back, if the current tally is to be true, which it appears that the India government is coming back into power, then today's market will be a reaction to the exit poll disappointment. It will not be a reaction to what markets were hoping. In the month of April, if anybody would have said that a 300 to 305 NDA, BJP plus NDA combination was coming, markets would have said, wow. In the month of March, it was 400. So expectations keep on changing as the narrative keeps on changing. Today, the narrative is based on what we saw yesterday. One. Second, if it reverses, which is that it is a non-India government coming to power, which looks like a slim majority and an outside chance as of now, but if that happens, then we are in for a bigger trouble. That means the scenario 2 comes in, that means the panic is not over. Third is, are we in for a V-shape rally? That I think is ruled out now. Because the excesses in the market which got created because of market participation, behavior, euphoria, put an option, assumption, trading, I think that trend in the market, somebody's put a harp in the heart of the market momentum in some of the policy stocks. And once somebody hits you, you will take your time before you heal and you recover. That is how I see the market moving.
Yeah, it's bleeding, and clearly, like you said, we are undoing, Sanjiv sir, all the reaction from yesterday, the exuberance, the froth, and then eventually once the rates settle down, once you know what the final seat count is, then the market will, go into phase 2 of reacting to that.
Correct, and Aisha, that is perfect greed and fear.
Yeah.
Till Friday you were fearful what the verdict is. The exit polls all came out with euphoria. There was a strong bout of short covering and you went ballistic. Now today the ballistic part has got very much corrected, and like Nikun said, I would expect you get stability, which means Modi ji comes and I am very sure we'll get 310, 320. That means the market will have made a strong bottom for the time being. Will it get into euphoria? No more.
No.
People will be choosy, they will wait for projection, they will wait for the budget, but maybe some of the sectors are overdone and you will see the outperformance of FMCG, insurance.
The underperformers.
Exactly. The large caps will place while and PSUs will take a strong breather, which was much needed after such a shock.
But Kunal, how do you tackle with today's pain? I mean, we are headed in for what, a 6% decline now on the Nifty, right? And I'm not even going to individual names. The pain is evident in the scripts. How do you tackle today?
Yeah, I think the best way to try and do is to trim your portfolios in the sense in which stocks which you have in terms of mid caps, PSUs, etc. Of course, you have to trim your portfolios over there. But then on the other hand, build large cap names. I think the defensive part of the tilt, FMCG, pharma stocks. I think these stocks will probably cushion the market sell-off further. The timing, the question over here is the time to buy. I believe in terms of technical structure, the best time to buy is when the IVs sell off. Because till the time the IVs are at 24, 25, 28, 29, which means the markets have still not factored into the event out. The event would be out or the event volatility would be out once the IV starts to collapse.
And they haven't yet.
They haven't yet.
Okay.
And whatever the number is, whether it's 22,000 for the index or 22,500 or maybe 200 points lower, that would be the point where the markets would probably take a pivot from there.
I'll give you a classic example here. What has fallen more than the Nifty today is the Bank Nifty. Within that, XBI is down 10%. Now ask yourself logically and say, okay, whatever the political mandate would be, I can argue about defense, I can argue about road, I can argue about infrastructure, I can argue about a lot of policy-dominated stocks. But what will change in life of in
SBI? Yeah.
The retail book is 55%. The corporate book is doing irrespective of what is happening. Their liability franchise is strong and they've gained market share. Why should that stock be down 10%? So there are a lot of these pockets where you will have to hunt. You will say, okay, what will be the reaction to this company irrespective of the government, and what will be the change if there is a change of government. I think that kind of opinion making now will start. But you should start doing that not today, maybe when markets settle. Let the markets stop falling. Let the markets know that what we are in for next 5 years, right? That will figure out by the end of the day. Once markets know in next 5 years what the mandate is, then you say, okay, whether collateral damage has been more and whether collateral damage is actually less. And that's the time you would say, okay, I'm going to go all in. I would say that would be a better strategy. I don't know if you guys agree with it.
No, I fully agree. Wait for the dust to settle, know what the program is, and you'll know by the end of the day. Like you said, there is no cause of reason for certain excesses, but those were already made excesses in the last few days.
Yeah.
Because yesterday was a blockbuster day as far as shorts getting squeezed, but it also meant there was a lot of froth which was created. I think it's a big correction of that froth. Underlying assets will again pull back, but once you have surety on what the next 5 years is, and Aisha, let me tell you, irrespective of who comes, the trend of India's growth is irreversible.
Exactly.
So we may see this volatility last another week, 10 days, and this to and fro, but by the end of the day, I feel a lot of the dust will be settled.
Yeah, I mean, if you're an India bull, eventually once the dust settles down, you'll be back to business and you will be back to buying those stocks. And whichever government comes into power, they have to focus on capex, they have to focus on defense, they have to, focus on India per se. So these stories will remain good stories.
Exactly, and that's what you were saying, that it's been 2 decades since you saw the real unraveling of value creation of PSUs.
Exactly.
It has just come to the fore.
Why would they give it away?
Why would anybody give it away?
No, the other point, Aisha, let's look at, and again, I'm not saying that what will happen at 4 o'clock. Right now, it is evident that the NDA is coming back to power, which is what is important. Let's remind ourselves 2 very famous examples. Circuit down in the market and circuit up in the market. 2003 circuit down, markets did not like the mandate. But markets didn't like the way the economic momentum was moving. So we saw the biggest bull market, which happened at a time when the government was supported by left. Similarly, 2009 circuit up. Markets said, wow, policy continuity, circuit up. But then we moved into a multi-year pause. And then by the time 2014 from 2019 moved, the India had moved from top 5 to fragile 5. Right? You'd become, there were narrative which said that, BRICS, India got out. So it really depends on what work will happen now. So markets will act and react. Today, let's say if whatever we are assuming today, if it changes in 3 months, stocks will recover. And my point is very simple, that right now, if we close in the current number zone, which is 295 to 300 for NDA, it means continuity. That is something which is not going to hurt the market in a big way. Then it would be called as a disappointment to the exit poll. If the tally changes in a very drastic manner, and if the green becomes a bigger number, and then this change of government, that is something what markets are not prepared for, and that opens the downside, and that opens serious downside in the short term. So let's cross the bridge when we reach there. Yeah. As of now, we are not there.
Kunal, any trades? I can see the Nifty Bank has fallen, 8%?
Yeah, I think it's 4,000.
Yeah.
No trades are such in this kind of a market.
Do nothing, right? Don't try and catch a falling knife.
Because it doesn't make sense to have, your IVs are still at 28, 29, and that's the base which we look out for. When the event is out, when the IVs collapse, and the IVs have to collapse for us to make a sensible trade, whether it's on the short side, because if it's on the short side, you are looking at a prolonged downtick for the index. Prolonged in the sense, maybe a 5% correction further for the next 1 month. And even if it's a bounce, then I think the average for that has to stabilize.
Let's see, all I can say is that nobody wants uncertainty. You want continuity. That's what life is all about. Not trying to predict the uncertainty, but trying to, embrace certainty. So by the end of the day, we vote for certainty rather than uncertainty, because financial markets have now become core to India's wealth creation. And it would be painful to see that if markets go down for whatever reason, and then you see a destruction of wealth. And I'm really keeping my fingers crossed that the numbers where we are right now, that slightly better becomes the reality.
We're down 1,500 points now on the Nifty. It's a 6.5% crash. Yeah. Let's use the word crash now.
Now it's crash.
It's crash.
It's more than a crack.
Yeah. But anyway, you never know. Yeah, you were making closing points.
So see, opportunity and fear go hand in hand. If you waited too long, then you may not get it, because just like the fall, by the end of the day, in another 1 hour, if you cross that 310, I would expect very strong short covering.
Also,
so
yeah.
see where you want to put your money. These opportunities don't come knocking every day.
So give us 3 names that you recommend
like I
buying
said,
right now.
I would say, ONGC and Coal India, clearness in anything of execution. There will be no hurdles. These are, the multipliers of the year. I would say HDFC Life, which I'm very, very sure is going to be one of the outperformers. And I would say Wipro and an ABFRL, which I think are going to be relatively well, ensconced against the government and so on. So do your picks and chooses, but don't miss the opportunity also for the next few days. The volatility and the fear is giving you an opportunity.
Sanjiv Bhasin is also back with us. Sanjiv, good morning. What are your thoughts on the way liquor stocks are getting re-rated? Also, beyond United Spirits or maybe a little bit Radico, now the street is coming to terms that there are some half a dozen other stocks as well. Any thoughts here?
Yeah, good morning. Ajay, it's the coming of age. You have to realize millennial drinking and preferred, branding, which has gone from the usual unbranded to branded has increased like manifold. And if you compare this with any other country, you will see that Indian percentage of excise revenues are going to rise very, very exponentially. Only the states have to be more cohesive within that. And as you see, I think states like UP and others have been stand out in this. So I'm very, very positive on this sector. As a disclosure, we have both United Portfolio and Radico Khetan. But we also think this Piccadilly Agro, we bought it much lower. It sells the brand Indri. That has been a big outperformer. And I think that this place has miles to go. Now, these stocks trade expensive right now. But if you see the demographic premium of India changing over a period of time, I think these stocks can be very, very big, consumption-led stocks which have a very sweet margin, and it's just the state's ad hoc adjustment to excise and other things which will come up. And this policy of, alcohol ban in states, because the underlying smuggling goes on in all those. So I think it's the coming of age, which will actually be very, very accretive for states as a revenue target and for the new age drinkers, which anyway are going to be more choosy about, connoisseurs about what their choice is. So this is an overweight sector for us.
Let's also hear out Madhu Kela's view on liquor space. Yesterday, we were speaking with him and he is making a strong case for having liquor stocks in your portfolio with a 3 to 5 year view.
There is no reason why liquor industry will not be as vibrant in India as it is there in China. We have more people as compared with China now, younger population, who will look to consume liquor once our per capita income increases. We have seen in lot of other sectors, in lot of other places that this liquor consumption has increased, and hence there has been birth of many, many valuable companies. I've been investor in Radico for a long time. You have seen what a fabulous journey this company has had in last 17, 18 years. They were selling whiskey at 500 rupees a bottle. Now they sold, the same company has sold a whiskey at 5 lakh rupees a bottle. Right? They sold 400 cases few months back at 5 lakh rupees a bottle. And the brand is globally recognized now. If you are able to build a brand, then you make serious money in this sector, and that is what is being proven by Pernod Ricard, by Diageo worldwide. If you look at their brand, they are selling one bottle of 750 grams at 25,000, 30,000, 40,000 rupees.
All right, there you have it. Let's the word on liquor stocks. But the other stock that was in the spotlight yesterday was Zee Entertainment. Remember, we were tracking it ahead of the fundraising announcement. It was announced at about 2,000 crore rupees, and analysts are of the view that mainly this announcement was done in order to improve investor confidence, to improve sentiment, remember, which has been soured after the $10 billion Sony deal had been called off. Sanjiv, I know you track this company as well, this Zee Entertainment. What's your assessment of the latest news that has come? The company has been in restructuring mode. They've been in cost-cutting mode as well of late. What's your outlook?
Well, Aman, it's been a sad experience, 2 years of wasted time of shareholders, creditors, bankers, institutions, and until yet the 3% shareholding of the Chandra and the Goenkas is still calling the shots. So there is no legitimacy of their continuance, and I think this is a weak spot. It is best avoid. If you want to be into media, it is better that you go into Jio or Reliance or Sun TV for that matter. For us, this is a total avoid at the time being.
Fair enough. That's the view coming in on Zee Entertainment. And finally, let's get in a sense from you, Sanjiv, as to what the outlook is at a time like this. What is it that you're looking at for opportunities within the broader markets?
So firstly, Avan, we think the market has retraced very sharply, more sharply than we thought. This is not the time to be too brave. Be watchful of what stocks you buy. ABFRL was a darling stock in the last 3 days, is up 30%. So has AB Capital, so has Vodafone. We think that group is being re-rated. Look for any opportunities to buy. Yesterday, we gave you Coal India and SBI Life in a couple of days. That has been out. We think insurance has bottomed out. And the IRDA proposals or the what they have as far as surrender value will not be able to be kicked in because there is too much of the margin contraction which they are talking of. I think insurance will be back and running. In fact, HDFC, SBI Life will come out with the best year ever because the last year was a low base. And I think insurance stocks as a defensive, as a character of growth over the demographic premium and the underlying asset becomes very attractive. So SBI Life, HDFC Life are two of our top picks. We are now today more defensive. We think Lupin in the pharma space is a very strong stock. And we've identified one very small micro cap technology stock called Intense Technology. This is from Andhra Pradesh and it has a coalition, one of the coalition partners. It's very strong in AI insurance. And we think that this stock can be easily a doubler from here, given that, Andhra and that region is going to see a lot of more impetus on IT and so on. That is, as a disclosure, we have an exposure. We think that stock can be a huge outperformer.
If you like this video, then like, share and subscribe to ET Now.